Hello students, let us start with amendments in indirect taxes. In that, let us start with first central excise duty. In central excise, there are two small amendments. The first one is about jewelry manufacturers. Now, jewelry manufacturers can avail SSI exemption, that is small scale industry exemption. Now, the normal limits of SSI exemption are like if your value of clearances is less than 4 crore in the preceding financial year, then you get an exemption of up to 1.5 crore in the current financial year. That are the normal limits for any normal industry. But that limit has been enhanced for jewelry manufacturer. They already had a limit, but that is further enhanced. For jewelry manufacturer, it is like this: if the last year turnover is less than equal to 15 crores, then current year up to 10 crores is exempt. So for them, the limits is 15 crores and 10 crores. Last year turnover or value of clearance is less than equal to 15 crores, then current year up to 10 crores is exempt. That's the first amendment over there. Next, amendment number 2 in central excise. Excise returns can also be revised. Excise return can also be revised. Earlier, excise returns were not allowed to be revised. Service tax return, etc. were allowed to be revised, but excise return were not allowed to be revised. So now, after amendment with effect from 17th of August 2016, excise return are also allowed to be revised, but the date is by the end of the calendar month in which the original return is filed. So let us take an example for that. If you file the return on 15th of March, let us say, so you can revise that return only by 31st of March, by the end of the month in which you have filed the original return. That's the second amendment. So these are the two amendments in central excise. At IPCC level, you have only these two amendments. Next, we go to the amendments in service tax. In service tax, let us start with amendment in point of taxation. Now this amendment is based on entire new concept. Let us try to understand this concept. The concept is the transportation of goods service is covered over here. Transportation of goods service. Now this transportation of goods service is provided by a person outside India. Let us imagine this is India. That person is known as foreign shipping line. This foreign shipping line is providing that service to another foreign person, let us say foreign charterer. So services are of transportation of goods. Goods are coming from a place outside India to India, that's the service, goods transportation. Now these services are provided by a foreign shipping line which is outside India. These services are provided to a foreign charterer which is also outside India. Means the service provider and service receiver both are outside India. The only thing over there is that service is transportation of goods in a vessel to India. So transportation of goods in a vessel to India is the service. Now, what they have done is, they have made the service taxable. Earlier it was like this, if both service provider and service receiver are non-resident, then the service was exempt. But now, even if the service provider, service receiver are outside India, it will be taxable if the services are transportation of goods services in a vessel from a place outside India to India. The only this service, transportation of goods from a place outside India to India, has become taxable. Now, since this service has become taxable, we will have amendments in all the chapters. First consequential amendment is in point of taxation chapter. In point of taxation, they have decided the point of taxation when they will charge the service tax. Point of taxation is the date of bill of lading. Date of bill of lading at port of export. So we have to first find out the port of export which is outside India, and in that port a bill of lading will have been filed when the goods are loaded in the ship. That date, bill of lading date, is considered as the point of taxation. I am repeating. Services is transportation of goods service from a place outside India to India in a vessel. Service provider outside India, non-taxable territory. Service receiver also outside India, non-taxable territory. But this specific service has been made taxable. Because of that, there are many amendments in many chapters. One of the amendment is in point of taxation chapter. For this service, the point of taxation will be the date of bill of lading. So where? At the port of export. So at the port of export, you have to check the bill of lading, and the date on that bill of lading will be considered as the point of taxation. That's the amendment. Let us go ahead. Next is amendments in exemptions and abatement. First of all, we'll talk about the legal services. Now, in legal service, many amendments have been made in many RTPs because many notifications have been issued. So what we'll do is we'll consider the final position as it is. So we'll discuss entire legal service over here. This is what is applicable for your exam. Okay? Service provided in relation to legal service. Let us talk only of legal service. You can write over here legal service. Now in that, first of all, let us discuss about exemptions. Okay? The first exemption is when the service provider is an arbitral tribunal. Service provider is an arbitral tribunal. It is providing legal services of dispute settlement, etc. It is providing that services to a person other than business entity. That is exempt. Means service provider is arbitral tribunal. Service receiver is a person other than business entity. Then the services are exempt. Secondly, if the services are provided to a business entity, but with a turnover up to 10 lakhs in the preceding financial year. Again, service provider is an arbitral tribunal. Service receiver is a business entity now, but it has a turnover of less than 10 lakhs in the preceding financial year. Less than equal to 10 lakhs in the preceding financial year. Well, it's a small business entity. Since the services are provided to small business entity, it has been made exempted. Clear? So these were the first two exemptions. Next, my service provider is an individual as an advocate or partnership form of advocate, and they are providing legal services. Either individual advocate or a partnership form of advocate, they are providing legal services. If they provide services to an individual advocate or a partnership form of advocate, that is exempt. By exempt. Individual advocate, partnership form of advocate, they are service providers. They are providing services to individual advocate or partnership form of advocate. They are the services here. Both are related. In that case, it is exempted. Next, service provider, again next case mein is individual or partnership form, but service receiver is other than business entity. So service provider is either individual advocate or partnership form of advocate, and the service receiver is any other person other than business entity. It is exempt. Next, third case mein service provider is individual or partnership form of advocate, and the service receiver is business entity with a turnover of up to 10 lakhs in the preceding financial year. It is exempt. So we have studied total 5 cases. First 2 cases where service provider is arbitral tribunal, service receiver is other than business entity. Second case where service provider was arbitral tribunal, service receiver was business entity with a turnover of up to 10 lakhs in the preceding financial year. Third case where service provider is individual advocate or partnership form of advocate, and service receiver is individual advocate or partnership form of advocate. Fourth, service provider is an individual advocate or partnership form of advocate, and service receiver is a person other than business entity. Next, service provider is individual advocate or partnership form of advocate, and the service receiver is a business entity with a turnover up to 10 lakhs in the preceding financial year. This all things are exempt. Next, we continue with the exemption. Next is service provider is a senior advocate. So who is a senior advocate? He should be designated as a senior advocate either by a High Court or Supreme Court based on his knowledge, experience, etc. So he cannot himself designate as a senior advocate. It is designated by High Court or Supreme Court. Now, if senior advocate is providing services, let us see what happens. Now, 3 exemptions over here also. First is senior advocate is providing services to advocate, individual advocate or partnership form of advocate, but they should have a turnover of less than 10 lakhs in the preceding financial year. Extra condition over there. Next is senior advocate providing services to a person other than business entity, that is exempt. And the third is senior advocate providing services to a business entity with a turnover up to 10 lakhs in the preceding financial year, that is exempt. So in case of senior advocates, also 3 exemptions. First is senior advocate providing services to an advocate or partnership form of advocate having a turnover of up to 10 lakhs in the preceding financial year. Second is senior advocate providing services to a person other than business entity. Third is senior advocate providing services to a business entity with a turnover of up to 10 lakhs in the preceding financial year, that is exempt. So this were the list of exemptions. What I understand from that is when it comes to individual advocate or partnership form of advocate, the wordings were individual advocate or partnership form of advocate providing services to an individual advocate or partnership form of advocate was exempted without any limits of turnover. But when it comes to senior advocate providing services to an individual or partnership form of advocate, that was exempt only if that individual or partnership form of advocate has a turnover of up to 10 lakhs in the preceding financial year. Clear with this much? Now sir, this is all exempted. So what is taxable? What is taxable? Taxable list may we come to the second box. If an arbitral tribunal is providing services, or if an individual or partnership firm of advocate is providing services, or a senior advocate is providing services to a business entity with a turnover of more than 10 lakhs in the preceding financial year. Okay, they were not exempted, so they become taxable over here. Either it can be provided by arbitral tribunal, or it can be provided by individual or partnership firm of advocate, or it can be provided by senior advocate. In all the three cases, if you provide to a business entity which has a turnover of more than 10 lakhs in the preceding financial year, it will become taxable because it was not covered in exemption. Clear? The next one, senior advocate is providing services. Now one more point about senior advocate. If senior advocate provides services to an individual or partnership firm of advocate, it was exempted only if they had a turnover of less than equal to 10 lakhs. So if they have a turnover of more than 10 lakhs in the preceding financial year, it will become taxable. Senior advocate is providing services to whom? Individual or partnership firm of advocate, and that individual or partnership firm of advocate have a turnover of more than 10 lakhs, then it will become taxable. Clear? Check. Now, important point about taxability is intaxable. If the services are provided to business entity and it becomes taxable, because that business entity had a turnover of more than 10 lakhs. In that case, reverse charge will be applicable. Service receiver, that is the business entity, will be liable to pay service tax. Service receiver, that is the business entity, will be liable to pay service tax. Clear with the taxability 2 points. The last point of taxability, come to that first box over there. Is person who is providing services is a person represented on arbitral tribunal and is providing services to an arbitral tribunal. Matlab, a person is providing representation services to an arbitral tribunal. Now it has become taxable, the exemption has been withdrawn, and it is taxable under which charge? Forward charge. Forward charge, matlab the service provider, regular, is liable to pay service tax. Ideally what happens is this service providers are nothing but senior advocate only. The senior advocate many a times provides service to arbitral tribunal also as representation services. In that case, it has been made taxable and it is taxable under forward charge. Clear? Chicken. So this was all about legal services. Clear with the amendments? It is including all the amendments. So base provisions are also there about the legal services and amendments are also there, and that's all about legal service. Let us go ahead with the next amendment. Next amendment is about Krishi Kalyan Cess. Now what happened was, Krishi Kalyan Cess was introduced from 1st of June 2016. So many people faced problem when they received the payment after 1st of June 2016 because it was made taxable if you receive the payment after that date. And for that they introduced an exemption so that people don't face an hardship. They told two things should be before this date. It should be on or before 31st of May 16. The first is the date of invoice. Invoice should be issued before that date. And second is the provision of service. The date of completion. This should be on or before 31st of May. In that case, Krishi Kalyan Cess will be exempted even if the payment is received after that date. So what has they have done? To remove certain hardship, they have told two things should be before 1st of June. On or before 31st of May. That is date of invoice and the completion of service, provision of service. If this is done, then no Krishi Kalyan Cess on the same. Clear? That was a small amendment. Let's go ahead with the next amendment. Now, this is about a service of transportation of goods from outside India to India. If goods are transported from outside India to India in a vessel, it was made taxable with effect from 1st of June 16 again. So, certain people might have removed the goods before 1st of June. They received after 1st of June and there might be some problems. In that case, they told if the billing is on or before 31st of May, billing should be on or before 31st of May, plus the import report should be filed with the customs authority on or before 31st of May, and you should get a certified copy of this import report from customs authority. These three things you need to do. In that case, it will become exempt. First, two are date related. Billing should be done on or before 31st of May. Import report should be filed with the customs authority on or before 31st of May. And the third thing is that import report should be certified. Certified copy of that should be obtained. If all these three conditions are satisfied, then it will be exempted. If it is not, then it will become taxable, and after 31st of May, from 1st of June it has become taxable already. Transportation of goods from a place outside India to India has become taxable with effect from 1st of June. Clear with this amendment? Next is amendment in abatement notification, that is about transport of passenger by air. Now normally what happens, transport of passenger by air is taxable. So in that case they give exemptions, they give abatements, etc. Now in case of abatement, they have given abatement of 60% when it comes to economy class, and they have given an abatement of 40% in case of other than economy class. But subject to condition that Senvat credit of only input services will be available, no other Senvat credit of will be available. Matlab Senvat credit of import, capital goods वगैरह will not be available. That was there from past also. So what is the amendment? Amendment is, instead of this small abatements of 60%, 40%, you will get an abatement of 90% in case of transportation of passengers by air which are embarking or terminating in regional connectivity scheme airports. So there are certain airports which are set up under regional connectivity scheme. If you start from that airport or if you end your journey in that airport, you will get 90% abatement. 90% abatement will be available. 90% abatement if the value is 100. 90% abatement, the value comes down to 10 and the tax will be there only on 10, the tax will be there. So on 10, that percentage, 14%, 0.5%, 0.5%, etc. will be applied. So you get an abatement of 90% if you start or if you end your journey in regional connectivity scheme airports, but this exemption is available only for a period of 1 year from the commencement of the operations of that airport. It is available only for 1 year. Condition is you should avail no Senvat credit at all. No Senvat credit at all. Neither of import, nor of capital goods, nor of input services, no Senvat credit at all. So that's the amendment wala part ki abatement, normal abatement is there for economic class, other than economic class, etc. But special abatement for RCS, Regional Connectivity Scheme Airport. Clear? Next is an exemption. This exemption is about one-time upfront payment. Now what is this one-time upfront payment? Many times what happens, the state government gives industrial plots. Now those industrial plots are given to industrial units, etc. on long-term lease, so that they can set up their industry. Long-term lease. Long-term lease means 30 years or more. So state government gives certain industrial plots on long-term lease to industrial units, etc. On that they collect something known as one-time upfront premium. This is over and above regular lease rentals which you need to pay every year. So exemption is available on this one-time upfront payment. On this one-time upfront payment, no service tax will be levied. It is exempted. Clear? So doubt, is the exemption available for yearly payments also? No. Exemption is available only on the one-time upfront payment. Clear? Next is no service tax on yoga. Now what is this? Earlier there was an exemption ki if there's a charitable institute which is registered under 12AA and it is providing specified activities as its services, then that services will be exempted. And one of the specified activity was yoga. And yoga was already exempted with effect from 21st of October 15. So from 21st of October 15 till date, yoga as a charitable activity, if it is provided by an entity registered under 12AA of the Income Tax Act, it was exempted. What they did now is, for the period before this date matlab up to 20th of August 15, and you can start that date from 1st of July 12. From 1st of July 12 to 20th of October 15, there was a doubt ki whether yoga will be taxable during that period or not, and the litigations were going on. The period is way back, but still the litigations were going on in 2017 also. Ki what about that period? So they gave a notification ki for this period also yoga is exempted only, no litigation, we won't collect service tax on the same. So it's like a clarificatory amendment since litigation etc. was going on. As of now, on or after 21st of October 2015, it was exempt only. The conditions were you should be registered under 12AA and you should be providing the specified activity of yoga, that yoga activity will be exempted. Now they have exempted it retrospectively. Clear? So that's a small amendment. Let us go ahead. Next. Service tax exemption extended to card transactions. So what is this? Now when demonetization happened, at that time it was promoted that you do transactions through e-payment, card payment, etc. But on e-payment, card payment, there are charges which are levied, and on that charges also service tax is levied. So it was a double impact for the consumers. So what they did, they exempted service tax on that charges. Sir, how come? What they did, they told ki services which are provided by acquiring bank. Services which are provided by acquiring bank. So what do you mean by acquiring bank? The bank which issues card. If you swipe your card, the payment gets credited in the account of that person, account of the person where you have swiped the card. That payment is made by the acquiring bank. He collects the money from you and makes the payment to the other person. For that he charges certain amount, and that is services. On that earlier service tax was levied. So now what they do, services by acquiring bank in relation to settlement of an amount up to 2,000 in a single transaction. Well, we have done a small transaction and amount is only up to 2,000, and you have done that transaction to either credit card or debit card or any other cards, etc. In that case, that services is exempt from service tax. So no service tax will be levied, but the condition is per transaction value should be up to 2,000. Now, transaction value will be up to 2,000. On that charges, etc. will be levied, but no service tax on that charges. Clear? So what if my transaction value, I have swiped a card of 15,000, then it will be taxable. Means the service portion of that service charges will be taxable over here. Clear? Next, scope of exemption enhanced for the services provided by business facilitator, etc. What is this? Earlier there was a clause which was already there, ki if the services are provided by business facilitators, business correspondents, or you can say bank mitra, in relation to operation of saving bank account, in relation to operation of saving bank account, which was linked to Pradhan Mantri Jan Dhan Yojana, that was exempted. But it was a very specific exemption ki the services should be in relation to operation of basic saving bank account, and that should be in relation to Pradhan Mantri Jan Dhan Yojana, then only it were exempted. Now they have enhanced the scope of that exemption ki all services which are provided by business facilitators or business correspondent in relation to accounts in rural areas have been exempted. So all services in relation to accounts, that account should be in rural area, account of the depositor, etc. All services provided by business facilitator or business correspondent in relation to accounts in rural area are totally exempt. So not specific services, but all services now have been exempted. So the scope of exemption has been enhanced, nothing else. Earlier, services in relation to basic saving bank account in relation to Pradhan Mantri Jan Dhan Yojana were exempt. Now all services in relation to account in rural area have been exempted. Clear? Next. Now, in case of IIMs, again the scope has been enhanced. Earlier it was ki residential 2-year postgraduate program was exempted. The word residential has been deleted. Matlab 2-year postgraduate program is now exempt even if it is not residential, but it should be provided by IIMs. In that case it is exempt. So the word residential has been deleted. That's a small amendment. Earlier also exemption was there, now also exemption is there. The only amendment over there is, earlier the word residential was there, now the word residential has been deleted. So any 2-year postgraduate program provided by IIM will be exempt over there. It need not be only residential programs. Next is exemption in relation to regional connectivity scheme. In that also viability gap funding. So what is this exemption, viability gap funding? Now, what happens is there are selected airline operators which are going to operate from regional connectivity scheme of airports. Now they will charge less money, but the problem will be the viability. If they make loss, then the airlines will discontinue their operations, and sometimes. Therefore, what the government did? Government told that operators, ki we will be giving you viability gap funding, giving you some amount to cover up your losses. Now this amount is paid to select airline operators. For what? Transportation of passenger services. Normally transportation of passenger services become taxable, but this amount which they get is exempted. Only the viability gap funding which they are going to receive is exempted even if the services provided are transportation of passenger services, but it should be in relation to regional connectivity scheme. It should be in relation to regional connectivity scheme. Clear? Next. Next is services in relation to life insurance. Now this is very specific. Many a times army, naval, air force, etc. funds are set up. Now they are group insurance fund. They will be providing insurance services to the army personnel, etc. That services have been exempted. They are life insurance services, but that service has been exempted provided they are provided by army, naval and air force group insurance funds. So it should be provided by that fund to specific members. Normally life insurance can become taxable, but this specific life insurance fund relating to army, naval, etc. so that has been exempted. Next is exemption withdrawn in case of transportation of goods. Now what is this? This is the important amendment. This we had discussed some time back. There is a transportation of goods services from a place outside India to India in a vessel. Now that has been made taxable. Even if the service provider and the service receiver are located in non-taxable territory, even if both of them, service provider and service receiver, both of them are located in non-taxable territory, still the services have become taxable. Normally, if service provider, service receiver both in non-taxable territory, then it is exempt. But only one exception over here. If the services are transportation of goods services in a vessel from a place outside India to India, it will be taxable, compulsory, even if both service provider and service receiver are both outside India in non-taxable territory. Star mark amendment. Now, on that we have already studied what will be the point of taxation. The point of taxation will be the date of bill of lading. That was amendment of point of taxation. Clear? Next, there is a small change in relation to exemptions available for services provided to education institute. Now, in case of education, there were many exemptions. One of them I am discussing over here. One of them was services provided to education institute. And it was like services provided to education institute in relation to transportation of student, faculty, staff, in relation to catering, in relation to security, housekeeping, in relation to admission, conduct of examination, etc. That was exempted. So someone else is providing services to education institute, and that services are of transportation of student, faculty, staff, or they are services of catering, or they are services of security, housekeeping, or they are in relation to admission test, etc. So that services were exempted earlier if they are provided to an education institute. And earlier the education institute for this clause was any education institute which is providing education from preschool to higher secondary, that is 12th, or any education institute which is providing education as a part of curriculum for obtaining qualifications recognized by law enforcement. Matlab, let us say college is providing BCom, etc. BCom is a course recognized by law enforcement, or an education which is providing approved vocational education course. So earlier 3 type of educational institutes were covered. From preschool to 12th standard was covered, or any other education institute which is providing any course which is approved or recognized by any law enforcement, or the third one was approved vocational education course. Now what they have done? They have deleted this second and third point only for the purpose of this exemption. Rest all exemptions of education institute remain as it is. I am talking only of this small exemption. For this exemption, they have deleted these 2 clauses. As of now, what happens is if the services are provided to education institute in relation to transportation, catering, security, housekeeping, etc., they will be exempted only if that education institute is from preschool to higher secondary. No other education institute. Clear? Earlier education institute में preschool to higher secondary, वो qualifications recognized by law enforcement, approved vocational education course, all 3 were covered for this clause also. But now for this clause only the first one is covered. Repeating, rest all exemptions are same as you studied earlier. Only changes for this clause of exemption to education institute, it is changed. No other change. Clear? Next comes abatement in relation to tour operator, that has been rationalized. Earlier different rates of abatements were available for different types of tour operator. Now common rate, everyone will get an abatement of 40%. Every tour operator, be it package, tour, be it only accommodation, transport, etc. All tours will get an abatement of how much? 40%, but the conditions are key. Send-VAT credit of input capital goods will not be allowed, but send-VAT credit of input services will be allowed. Now you need to be careful over here. earlier na, it was key in input services also only tour operator input services send credit was allowed. Now it is like ki, since they have reduced the abatement, they have told ki now you will get only 40% abatement. They have told ki in case of send credit of input services, all input services which are eligible, you will get the send credit of that. There is a slight change. Earlier only tour operator input service send credit available. Now all input service send credit available. Conclusion. In case of tour operator, new abatement rate is 40%. And in that send credit, no send credit of input, no send credit of capital goods, that was there earlier also. And in case of send credit of input services, all send credit available for input services will be available over here. Clear? But condition is there, ki your bill should indicate ki the charges are inclusive of accommodation and transportation. Two things should be included in that, accommodation and transportation. So your bill of the tour operator should indicate ki this is his charge, this is the accommodation, this is the transportation, all inclusive. Two things should be at least included, accommodation and transportation. Then you will get 40% abatement over there. That charges should be included, then you will get abatement, so the value will get reduced and then the tax will be calculated. So what if he raises the bill only for his charges? Then no abatement. His charges are entirely taxable. They give abatement because it's a package too, generally it includes accommodation and all. So they will give an abatement of 40% only if the bill includes accommodation, transportation, his own charges, etc. all inclusive. Fine? Sure. Next is a clarification in respect of transportation of goods by sea. They have just clarified one thing, ki we have already studied ki if there is a transportation of goods from a place outside India to India in a vessel, that is being taxable even if the service provider and the service receiver are outside India, etc. Now they have issued a circular and they have told ki in this case this is taxable, plus they will get no abatement to them. That's it. You can write a crux of this entire box. We already have studied ki transportation of goods from a place outside India to India in a vessel are taxable even if the service provider and service receiver are non-taxable territory. What extra we studied over here is they are taxable and they don't get any abatement also. Normally what happens, transportation of vessel may there is an abatement of 70%. But in this special case there is no abatement also. Clear? So we are done with all the amendments relating to exemption. We go to the next chapter, service tax procedures, amendment relating to service tax procedures. In service tax procedure, the first amendment is in regard with aggregator. In case of aggregator, what was the scheme earlier? Here, देखो. Let us say Make My Trip is an aggregator. So what do you mean by aggregator is, he has a portal. In that portal, he will be listing all the service providers. These are the hotels available. We as a service receiver, we log on to that portal, we select the hotel, we make the payment through Make My Trip, and Make My Trip makes the payment to the hotel. In that case, government had made a law earlier ki Make My Trip is an aggregator, and then in that case, aggregator is liable to pay service tax. So we'll be making the payment to Make My Trip including service tax. Service tax will go to government and then they will share. Make My Trip and the hotel will share it. So what happens is the government gets the revenue earlier. They did not wait for the hotel to give the revenue. Normally when we take services from hotel, ideally the hotel is the service provider and we are the services here. Make My Trip is just a middleman. But here it was deemed that Make My Trip is an aggregator and he is liable to pay service tax. But now a small amendment in that. What they have told is, let us say if there is a portal. It lists various service provider. And this service provider have their own service tax registration number. These hotels which are listed have their own service tax registration number, plus we as a service receiver, we book the hotels, we make the payment directly to the service provider and no amount is paid to Make My Trip, etc. Let us imagine such a scenario. In that case they say this Make My Trip will not be considered as an aggregator and he won't be liable to pay service tax. But there are conditions, key hotel, etc. should have service tax numbers, registrations, plus we are making payment directly to hotel and not through Make My Trip. Even if small amount goes through Make My Trip, gone, that Make My Trip will be deemed as aggregator and he will be liable to pay service tax. Clear? So conditions are given. Condition number A mein, you can mark ki that hotels etc. have the service tax registration number. In condition number B, you can mark ki no amount is received by the aggregator directly from the recipient. The aggregator should not receive any amount directly. Matlab we as a service receiver should make directly payment to the service provider and not through an aggregator, then this concept will be applicable. So what if we make payment through aggregator, then the aggregator liable to pay service tax. Clear? Okay, we go to the next amendment. Again, same. So which same? Transportation of goods from a place outside India to India in a vessel. We already know now it is taxable. Now it is by heart verse. And we know it is taxable even if the service provider and the service receiver are outside India. So what is there in this chapter then? In this chapter, they have decided who is the person liable to pay tax. See, in the earlier chapters, we decided what's the point of taxation. What was the point of taxation? Chalo, tell me. Point of taxation was date of bill of lading. Okay? Now in this chapter, we are trying to decide who is the person liable to pay tax. Reason, both service provider, service receiver are in non-taxable territory. Then whom to catch? So they have made various amendments. Earlier, they were telling ki the person in charge of the vessel, that is master of the vessel, will be the person liable to pay tax who brings the goods in his vessel. But now they say after amendment, ki the importer will be liable to pay service tax. Imagine a scenario. I import certain goods from place outside India, so there will be transportation of goods from a place outside India to India. Let us say my service provider is outside India, service receiver is outside India. I am just an importer clearing the goods in India. I am neither a service provider, I am neither a service receiver. Still, these services are taxable, therefore I as an importer will be liable to pay service tax. Normal scenarios mein what government does is either service provider is liable to pay service tax or service receiver is liable. But it's a special scenario where the importer will be liable to pay service tax on this transaction. In earlier chapter, we have studied that this transaction is taxable. We had studied the point of taxation of that transaction. Now we are studying that importer who imports the goods will be the person liable to pay service tax. So what you can do is you can ignore this first point because that was there earlier up to 22nd of April. Now with effect from 23rd of April, it is importer who is liable to pay service tax. Importer who is liable to pay service tax on this transaction. Clear? Okay, now, in the second part, they have explained that in that transaction you can go for an option also, optional scheme. In optional scheme, what you can do is you can directly pay service tax instead of calculating value on this transaction, transportation of goods from a place outside India to India in a vessel that was taxable. And who was liable to pay service tax was the importer. So they gave an option to importer. What can an importer do? Importer can pay the service tax as 1.4% of CIF value of the goods, and then Swachh Bharat cess will be there and Krishi Kalyan cess will be there. This will be equal to 0.05% and 0.05% of the CIF value. So it's an optional scheme. So one more composition scheme notified means. So as an importer I have an option. First option is go and find out the value on that value, regular 14%, 0.5%, etc. That's the first way out, regular, normal. Otherwise, this is an option. Ki instead of calculating value, directly you can calculate service tax and pay. And that service tax is equal to 1.4% of the CIF, and Swachh Bharat cess and Krishi Kalyan cess are accordingly calculated as 0.05% and 0.05% of CIF, and this you need to pay directly. That's a compulsion ki option. That's a very important amendment from exam point of view. The new composition scheme is available in case of transportation of goods from outside India to India in a vessel that is taxable. Even if the service provider, service receiver are outside India, we know who is liable to pay tax over here? The importer. An importer has to pay service tax accordingly under the optional scheme. Sir, if he wants to go for a normal scheme, he can go for that. Okay? This is the amendment in service tax procedure. Let us go ahead with the next one. Next is amendment in SENVAT credit. Okay. First amendment in SENVAT credit is about the jewellery manufacturer. Sir, we had studied about this in Excise. Yeah. For jewellery manufacturer, we know that in case of SSI, if their turnover is less than equal to 15 crore in the preceding financial year, the value of clearance is less than equal to 15 crore in the preceding financial year, they get an exemption up to 10 crores in the current financial year. That is there only. Now, they have told that if the turnover is up to 15 crore, they are deemed as SSI. Fine. If they are deemed as SSI, then in SENVAT they will get 100% SENVAT credit of capital goods in the year of purchase only. Okay, there was a clause ki SSI will get 100% SENVAT credit in the year of purchase. Normal person gets 50% SENVAT credit in the first year and balance in the subsequent year. But in case of SSI and that too jewelry manufacturer में SSI is up to 15 crores in the preceding financial year. They will get 100% SENVAT credit in the first year. Clear? Next one. Next amendment is very small amendment. Earlier what was happening was you need to attach railway receipts with STTG. Sir, STTG, Service Tax Certificate for Transportation of Goods by Rail. This you need to attach, then only you are getting the SENVAT credit of input services. Matlab, say if I have taken an input services of transportation of goods by rail, so I wanted to take SENVAT credit of input services, I need to attach two documents earlier. One the railway receipt, another is STTG. So now they told ki no need to attach railway receipts. If you have the STTG also, you will get the SENVAT credit. Clear? That was a small procedure amendment. Next one. Next one is important because it is again about transportation of goods. So, sir, we are studying this from the start. Let us try to understand. From the start, we have studied key transportation of goods from a place outside India to India in a vessel is taxable even if the service provider, service receiver are outside India. We have studied already this taxable. We have studied POT of the same. POT was date of bill of lading. Then we have studied in the last unit we had studied who is the person liable to pay tax. The person liable to pay tax was the master earlier, then they brought amendment and then they told ki not master, now it is importer who is the person liable to pay tax. Then over and above they gave an option composition scheme ka ki directly service tax is equal to 1.4%, Swachh Bharat says Krishi Kalyan says is equal to 0.05%, 0.05%, etc. Now we studied this from SENVAT credit point of view. SENVAT credit point of view, who will get the SENVAT credit of the service tax paid? So they say the importer. The person liable to pay tax was the importer. So that importer, for that importer it will be deemed as input services and he will get the SENVAT credit of input services. Provided what has been transported is his input and capital goods. Matlab, the goods which have arrived should be inputs or capital goods for that importer. If they are inputs or capital goods for importer, then the services will be considered as input services for the importer. Repeating, importer was the person who paid the tax. Clear? So the question was who will get the credit of the input services now? They have paid service tax on input services. Who will get the credit of that? The answer this is, importer only will get the credit of the tax paid on the input services provided the goods which are transported should be either inputs or capital goods. So if the transportation goods are inputs or capital goods, then this services will be input services for the importer. That's the first amendment in SENVAT credit. Then next amendment in the SENVAT credit is like this. When is that SENVAT credit available? When is the SENVAT credit available? So they say the SENVAT credit is available when the service tax is paid. Okay, so now it makes very clear. First was who will get the SENVAT credit? The SENVAT credit will be given to the importer. Who is liable to pay tax? The importer. Okay. So importer is liable to pay tax. He pays the tax. Then importer can get the SENVAT credit of the same. When he pays the tax, after that he can take the SENVAT credit. So what is the document or proof which is required for SENVAT credit? That's the next amendment. They say the challan of payment of tax. As an importer, he has paid the tax on the same. The challan of payment of tax will be considered as a document, will be considered as a proof, and on the basis of that, he will get the SENVAT credit. Clear? So, we are done with the amendments regarding indirect taxes applicable for November 17 examinations. Thank you so much.